afternoon or good evening, depending on where in the world you're signing in from today. I really appreciate you for taking the time out to join us today. Today I am joined by Contango ORE's CEO, Rick Van Nieuwenhuyse, and CFO, Mike Clark. Gentlemen, how are you today?
Good to be back on the Six platform, Romeo.
Yeah, good to see you guys. Now, here's how today's going to go. I'm going to ask Rick and Mike a few questions. Then I'm going to open it up to questions from the live audience. So today is an interactive event. Please feel free to use the chat button at the bottom right of the screen anytime during today's presentation. I'll say that today's event's also being recorded. It will be available on both YouTube and at Six.com, probably tomorrow morning Eastern time, quite early in the day. Now, Rick, before I get into the few questions that I've got, I'd love if you could just give us a quick review and wrap up of 2024's production.
Sure. So we started production at our Manh Choh project, again, joint venture with Kinross, mining at Manh Choh, transporting the ore to the Fort Knox mill, just located outside of Fairbanks, by truck. And we had the first gold pour in July, I think it was July 8th, and then roughly a month of processing Manh Choh ore in the first campaign or first batch. And then a second batch in September, and then a third batch in November. And the third batch was above plan, if you will. In total, we produced about 42,000 ounces of gold. Most of that came in at the end of 2024. By the end of 2024, there's a few little straggler ounces that actually occurred in 2025, got sold in 2025, but basically 42,000 ounces. And that was the original guidance was between 30 and 35. So this was definitely, well above guidance. Cost came in the neighborhood of our guidance, around $1,200. I think, all of this was original guidance was all based on the feasibility study. So we produced more gold at roughly the guidance cost that we gave of $1,200. I think the feasibility study had $1,116 in there. Clearly costs have moved up a bit, but obviously the price of gold has moved up even more significantly. From we did the feasibility study. We used a $1,400 gold price for establishing reserves, if you will. So that was basically 3 batches. Delivering about 42,000 ounces net to Contango for our 30% share of production. In total, the mine produced about 200,000 ounces. So this is not really a small mine. It's very good grade. Again, it's the feasibility study grade, and using the $1,400 gold price cutoff, resulting in a little over 8 grams per ton. Now we're using $2,500 gold price for the 2025 and going forward mine plan, life of mine plan. And of course, that brings us to sort of November, when we gave guidance towards the middle end of November, I think it was now, where for the 2025 mine plan and the life of mine going forward, our costs have gone up, and I'll explain a little bit why they went up. And our production guidance actually went down from what the original guidance was from the feasibility study by 15% or so. And obviously that was not taken as good news by the market. And, our share price got hit very hard. I think we're off about 40% in, that week of trading, so to speak. I thought it was a little overdone for, we're still going to generate 60,000 ounces of production and generate good, strong cash flows. Roughly $50 million of free cash is expected to come out. That was the guidance. We think it is a conservative plan. I think that's what we typically expect from Kinross. And if I look back on 2024, I mean, the original guidance was between 30 and 35,000 ounces, and we produced 42. So obviously there's no guarantee that we'll do the same thing this year, but I think it's fair to say that when Kinross puts a mine plan forward, it's something they're going to meet or beat. So I think that's our attitude on the existing mine plan. I took the opportunity to buy more shares. My chairman also bought more shares at the low price. So we think we obviously still believe in the company and believe in the business plan. So, Mike, anything you want to add to that?
No, that's perfect. I think the only thing kind of outstanding is we're waiting for the Q4 financial reports from Kinross, so we can get the actual cash costs and AISC costs that we should have the next month or so.
Awesome. Speaking of, and Rick, there were a number of questions I thought of for how to kind of figure out your headspace and how you're thinking about the future of the company. But really, I guess one, just to jump off of what you just said, why did you and the chairman just invest to my eyes, a lot of money in Contango stock?
Well, yeah, I mean, we thought it was an incredibly good time to buy stock at a low valuation. I mean, if you look back at the last quarter of last year, we had the election that and Trump won by a solid margin, which I think is good for the mining industry in general and for resource development projects in general, specifically from a permitting standpoint of getting stuff done, which of course under a Biden administration has been difficult. So I think from that aspect it was a positive thing, but the gold price came off $200, and I can speculate as to why all that was, but certainly crypto took kind of center stage with Trump's endorsement and Elon Musk and all that whole dynamic. And you saw Bitcoin go up and gold price go down, so to the tune of $200. So that was a bit of the backdrop. We went from 20 something down to $18, $17, $18, and then we put out our new guidance and life of mine plan going forward, which obviously was a disappointment to the market, higher cost, lower production. But I thought it was like seriously way overdone, because we're still producing gold, we're still making money. Our priorities are pay off the debt, deliver into the hedges, and advance our other projects, all of which we're still planning on doing.
And is it fair to say, and I guess, Rick, I'll start with you, but this is really a question for both of you, that the announcement in November was a worst case scenario rather than a kind of guaranteed spot for where Manh Choh production is going to be? And how has that evolved?
Yeah, we certainly see it as, Kinross putting a conservative plan out there that they're confident they can meet, and with the expectation that we think we can beat it. And I'll give you some examples. And I'll focus on why are we producing less ounces? Well, because the state government put in place bridge weight restrictions on the Chena floodplain bridge, which meant you can't put as much weight in the truck because it's a gross weight that the bridge weight restrictions are based on. So when you lower that, you lower the amount of gold you can deliver, because we do have a fixed number of trucks that we can run a day, and that's by so it's sort of a self-imposed limit, but it was basically I'd say a commitment to the community that we're going to run 60 trucks a day and not more than that. So when you self-impose that, that restricts how much gold you're going to end up producing. So that was certainly part of the whole dynamic, and that resulted in the roughly, I'll call it 15% less production than the original feasibility study guidance. But there's another component here. So in the cost going up, part of that certainly is it costs you the same amount of money to run a truck, whether it's got 43 tons of ore in it or 50 tons of ore in it. So that's part of it for sure. But there's another big part of it, and that is the feasibility study was done at $1,400 gold. The mine plan going forward is done at $2,500 gold. That's a 40% difference. So when you have a higher gold price that you're assuming what is reserved, you use a lower cutoff grade, which means your average grade goes down. Therefore, your cost per ounce goes up, because your mill's a fixed throughput thing. So our costs going up are certainly related to the bridge weight restrictions and the other limitations on how many tons of ore you can put in a truck. But they're also very much related to the gram of gold, average gold grade that went down 100% due to the price of gold and up the higher price of gold. And what I think the market failed to appreciate is that dynamic, using a higher gold price and a lower cutoff grade, adds a year to the mine life. So we don't have less gold. We have actually, in life of mine, we have actually slightly more gold. So that's all part of the dynamic. So, yeah, like I said, I think it was a huge overreaction from the market personally. That's why I thought it was a good buying opportunity. I'll be clear, my chairman shared that view.
No, appreciate that. And you did mention the bridge, and I'll get straight into it because it come up in the chat. It's certainly come up on email. A number of people have written in asking about any updates on the bridge. They always usually capitalize the and bridge. So curious if you got any news there, just so we can let investors know.
Yeah, so I mean, timing's everything in this business. So the bridge weight restrictions were put in place by the Alaska Department of Transportation, who's responsible for managing all the transportation corridors, and that includes the bridges. And they were put in place because essentially the federal government had not approved their plan, their overall highway plan, for how you spend. When you spend federal dollars, they have to approve how you spend those dollars. And it wasn't anything specific. It was just a number of things in the plan that the federal government wasn't happy with, and so it was, go back and do your homework. But that resulted in, because they didn't then have a timeline as to when they could do the proper maintenance and repairs, upgrades, or if you will, on the bridges, not just this bridge, but a bunch of bridges. And so when you do that, the state says, okay, well, I don't know when that bridge is going to get fixed. I've got to be more restrictive on the bridge weights. So that's when they went in place. Now, as it turns out, at the very end of December, the federal government approved the state's plan for the overall plan for spending this year's, not 2025 budget. So now they're going to go back, and now that they have an end date on when they can fix the bridges by, because they have the money to do that, they'll go back, and it's not going to happen like tomorrow, or it's going to happen this year, probably in the summer, I'm going to guess. That's when they did it last time, and update what those bridge weight restrictions are. So we might well see those come up, and that would gain us another couple of tons of ore. So it's these things are a little bit frustrating, but like I said, it's not the end of the world. We're still hauling ore, and we're still pouring gold and making money.
One last one on the bridge. Aiden from the chat asks, have bridge bypass options been explored? He says that some cursory research suggests that there is a potential to bypass the bridge.
Yeah, and I'll say that certainly there are a number of opportunities to bypass the bridge, but frankly, and this is me speaking, not trying to speak on behalf of Kinross, but and they're the manager and operator. We see them as more community complicating, not as community friendly, if you will. People said, oh yeah, we'll just break them into singles and take them across. Well, okay, now you got twice as many trucks running. So, I think, and to be perfectly honest and blunt, I think this plan is a plan that can be met. I think over time there'll be some incremental improvements if they take off the bridge weight restriction and maybe gain a couple of tons there. There were other contributing factors to the overall reduction, and that is that the ice and snow buildup in the wintertime was included in the max load from the state's perspective. So that reduced a couple of tons there. You pick up a lot of ice and snow when you drive a truck that distance. And then in the summertime, it's mud. Now most of that gets stuck on the trailers, the truck and trailer, mostly it's the trailers, from the mine site down to the highway. The highway is generally pretty clear, certainly clear of mud. So solution, put a wash station in, and so get the mud off in the summertime, and just proactively knock the ice and snow off at the bottom of before you get on the highway. So, because again, the highway's generally pretty clear. So those are all things that they're incremental. But the mine plan, or the mine plan that was put forward in terms of tonnage was based on hauling effectively 43 tons of ore. Mm. But if you can gain back a few more tons by knocking off the snow and in the wintertime, and knocking off or washing off the mud in the summertime, I'd make that up. The other area was moisture content. The top of the ore body has proven to be more moisture absorbent, if you will, than what was in the feasibility study. Waterways, another couple of tons when you pack it into the rocks. So looking at ways, and they're doing this now, is looking at ways to not have water accumulating in the bottom of the pit, and not having it accumulating anywhere near the stockpile, so that the rock doesn't have the ability to sort of tack on the moisture content, if you will. So those are all mitigations mitigating things that you can do, and that they are currently looking at. Keeping water away from the bottom of the pit is drainage and putting barriers up where water might leak in. Same around the stockpile, just put a drain in and work it that way. And this was the first 6 months of operation we're talking about here, right?
Sure.
In terms of production, not in terms of mining, because mining started last year ago, November.
Mm-hmm.
So, but this is it's a bit of a learning curve, and you don't always get it 100%. But I'm confident we'll make incremental improvements on gaining back some of those tons in the truck and trailer assemblage.
Great, I appreciate that. Mike, I want to get you in here. I got 2 in a row for you. What's the forecasted timeline for debt repayment, and what's had to change after last year's announcement?
Okay, so currently the debt and hedge, the debt repayments and hedge deliveries are all targeted to be paid out by the end of December 2026. With the kind of extended mine life and annually lower production and slightly higher costs, it's caused us to kind of relook at it and look to kind of push things out slightly into 2027. So that's what we're currently discussing with the lenders. We're all more or less in agreement on what needs to be done. It's just taken a bit of time to get here. And so we anticipate we should have a final solution in place within the next couple of weeks, with an outside date of the end of February. It's really just ticking the boxes. When you extend beyond the maturity date, that means you just have to go do a few extra things for the lenders. And the fact that we have 2 different lenders, there's been some changes in personnel with the lenders, and in addition to Christmas holidays. So it's just taken a few extra weeks than what was originally thought it would take. But everything's being very constructive, and we're confident we'll be there in the next couple of weeks. Okay,
great. Jason from the chat asks, Mike, I'll throw this to you as well. Will the lower production extend the time that we're selling hedged gold? And he notes, wouldn't it be better to close the hedge sooner rather than later?
We would love to close the hedges, and we're looking at opportunities in ways that we can do that. But currently, as it stands, we're just focused right now on just working with the lenders to make sure there's more than sufficient capital or cash in the bank to make all of our payments and deliveries. So right now, it's kind of a balance between principal and hedges, but I think we're going to explore everything we can, and if the mine does better than currently modeled, and which at current gold prices it's $2,700 versus the $2,500, there's plenty of opportunity for that, and we will be looking closely at buying down those hedges as quickly as possible. I think that's our focus right now.
I'll just add that with the third batch sort of being an extra batch, if you will, from 2024, we deliver those to the hedges. So kind of in advance of when they need it to be. So we're doing everything we can to reduce that hedge.
Yeah. So what Rick's saying is we bought out the 16,000 ounces that were supposed to be delivered in January. We bought those out in December when that gold price dipped, and so by doing that, we've freed up between if gold prices stay the same when we start batch 2 and our first batch of this year, we should have made about $1.5 million to $2 million at these gold prices by making that trade. So those are the things we keep looking at, and obviously we would like to be unhedged, and so we'll just keep delivering as quick as possible.
Makes sense. Appreciate everybody in the chat. I know there's quite a few questions there, so really appreciate everybody shooting them in. I'm going to be bouncing back and forth, but if I don't get to it, please bug me in the chat. I do want to try and get to all your questions today. I got one more. Rick, I'll throw it to you first. As the short volume in Contango does appear to keep reducing, what do you think will or could turn around the current comparative weakness in share price?
I think when people see that we're still generating cash. I mean, we saw a lot of notes and conversations about if they won't be able to deliver the hedges, they're going to go bankrupt, and that's frankly just complete nonsense. Bankers don't put you out of business. We have a new mine plan that's based on $1,100 increase in the gold price. That's not a bad thing. we're going to make more money than we sure as hell going to make more money than we were anticipated, that was anticipated and assumed in the feasibility study. So we're going to start the first campaign for 2025 in February. I think the date was the 4th. I think they're going to start. So and I think we're on time, we're on schedule. We're going to produce gold, and we'll report on that, and just to let everybody know that it's kind of business as usual. And as Mike says, since we've already delivered the January hedges, this will all be sold at spot, which presumably is $2,700 plus. So yeah, we're gonna make a bunch of money.
That's always good.
It's a good thing for your company.
Romy, to add on to that, I think once we kind of announce the resculpting of a small amount of these principal repayments and hedge deliveries into what we expect to be early 2027, I think the market may feel a little more relaxed about our position and less concerned about us not being able to deliver.
Sure, I appreciate that. One person wrote in on email and asked what Contango's view on distributing free cash flow to investors via share buybacks, cash dividends versus M&A. I'll throw it to whoever wants to answer first.
Yeah, maybe I'll start, Mike, and you jump in. Look, the first order of business is paying off the debt, delivering the hedges. That's business number one. Business number two is advancing our other projects, and part of that is working out an arrangement to process the ores first from Lucky Shot and then eventually from Johnson Tract. So I'd say those are our 1, 2, 3 priorities. Paying a dividend to shareholders, frankly, is not a priority now. It is a long-term objective of getting this company to where it's making a lot of money, and can then distribute that to a portion of that to shareholders.
Great. There's kind of 3 categories of questions left, so I'm going to try to, just in case in the chat you think I'm skipping your questions, I'm going to do the Manh Choh ones in order, other projects, and then we'll get into more esoteric questions for Rick. There's some of those in the chat. So first is, have the results from the 2024 exploration program added to the resource base? This is from Manh Choh.
I just asked that question to Kinross, actually, so I don't have an answer to it. And it's it's kind of in 2 parts. It's the pure exploration program, but then it's also using this higher gold price. What does that have? What does that mean in terms of stockpiles and stockpile grades? Because when you're mining, if you're using $2,500 gold price versus a $1,400 gold price, there's a lot of material that now is ore.
Sure.
So we don't have hard answers to that, but we're working on that right now.
Great, thanks. I know we already went over it, but always good to reiterate. T. Decker from the chat asks, when's the next drop and how much?
Sorry, what's...
when's the next round of production, I think is what he means.
Oh, sorry, we said drop, I wasn't sure. So yeah, the next campaign starts in early February. It'll basically last most of the month of February. And then every 3 months after that. So it's the middle of every quarter, basically, is the planned production for 2025.
Great. BA Minex in the chat asks, is ore production reduced to balance currently reduced transport? If so, is more development or other work being done, or a reduction in contractors?
No, there's no reduction in the contractors. Black Gold Transport is the primary contractor, or the only contractor for hauling the ore, and their contract hasn't changed. The only thing that's changed is the load's the same weight, right? The assumed weight is the same. It's just that because of the bridge weight restrictions and what have you, it's the effective load's not 50 tons, it's 43.
Right.
And if we can make up, in the summertime, we can wash off the mud that accumulates on the truck ride from the top of the hill to the highway, we gain another couple of tons. And if we can do the same with knocking the ice and snow off before it gets on the highway, you're probably going to pick up some tons, but you're going to get back some of those tons. And if the states reevaluates and redoes the calculus on the bridge weight limits and says, oh, we can probably up that by another ton or two, then we'll gain all that back. it's all incremental. It's,
Sure.
there's no quantum difference here. It's just, it'll be little increments of improvements. And the same with the moisture. Yes, like I said, they're all things. When you first start up a mine, you focus on, getting tons, and then you go, oh, those are wet tons. We don't want wet tons. How do we get rid of that water?
Right. It makes sense. Little increments, they add up. Someone from the chat asks, this is moving on from Manh Choh now. What's the plan for Johnson Tract this year, and how's that plan going to date? They want to know if there's any estimate for when its path to production is.
Yeah, I mean, I think our 5-year guidance is still, kind of we're still on track to achieve that. Frankly, the main thing we're doing right now is kind of related to permitting. The easements, the CIRI has the easements in place now, so we can. The next step is doing all the permitting to connect for a road access from the mine site down to a potential barge site on the coast, and then the second easement is actually for the barge site. So technically there's 2 easements. We kind of think of it as one because they're linked, right? So that's the main effort, is to do all the baseline environmental studies to support permitting a road and barge site facility at Johnson Tract. That's the main effort. And then secondarily, we would look to build the road to connect the campsite to the portal site. So that's the other effort that will be taking place over the next 2 years on both those things.
Great.
The third thing that's going on is we're permitting the tunnel site to construct a tunnel, an access tunnel. So very much like we've done at Lucky Shot, where we permitted the access tunnel to get underground so that you can do the development stage drilling to complete a feasibility level study. So that we have not yet permitted the tunnel site at Johnson Tract. So that's the third thing that's going on, and I'll add one more to it. We are working on a PEA. I think we announced that last year, and we're still on track to get that done early this year. I think I'll find out. I got a meeting tomorrow, so I'll find out what the schedule is. But we're not in a hurry. We want to make sure it's a good, solid PEA that we believe. So there's no sense in kind of trying to rush these things.
Sure.
But that's the reason we want to put it out is we want to people understand what the quantum of value is that there is at Johnson Tract. And then of course that's the I guess that's what five things that we're working on with respect to Johnson Tract.
That's great. One other follow-up Johnson Tract question from the chat. They want to know if you plan to put in a rail or road. They mentioned they saw it in writing. It alluded to either or.
No, Johnson Tract's never been a rail. We're too close to the water to want to, and the terrain's very steep there, so you'd never get a rail. No, this is a road access from the mine site, or where the projected mine site is, down to a port site or a barge port site on the coast. It's about 20 miles, roughly speaking. And when you're on the water, barge traffic is by far the easiest way to transport, bulk items. So it's a lot less expensive to move things by barge than it is rail. So Lucky Shot, just to cover it off, Lucky Shot, and this is probably maybe where people are confused, mixing Johnson and Lucky Shot up. Lucky Shot is about 20 miles from the existing Alaska Railroad at Willow. So and Lucky Shot's literally less than 20 miles down to the railroad there. So that's a place where we might use the rail. Is that
Great. I think that was the case, but good to clear it up. A couple of broader questions. Somebody from the chat asks, just to understand your thinking, notes that in previous presentations you've indicated Contango's goal is to be producing around 200,000 ounces a year. He notes that with the mine life on Lucky Shot and Manh Choh, he's curious how you anticipate getting there, because from his eyes, you'll just be replacing the production from Manh Choh with Lucky Shot rather than adding additionally.
Yeah, certainly Lucky Shot is if you don't find any more ore at Manh Choh, that's what you'd be doing, is sort of replacing that. Johnson Tract is what doubles that, basically. And of course, we have our eye on a few other things that we're looking at. So that's where we think we can get up to 200,000 ounces of production. That's the goal.
Great.
When we say things, it's more like a goal than and obviously there's a lot of work that we have to do to demonstrate that we can do that. But that's the plan. Sure.
And currently, what is the estimated mine life for Johnson Tract?
Well, that's what the PEA is going to tell us. But we're looking at, I would say, sort of 5 to 7 years is kind of what you're looking at with the current resource. And we don't have any plans to try and expand the resource. That's plenty of resource to start a mine on. It's really good quality, and I've always been more of a fan of quality than quantity, especially for a junior producer.
Sure.
That's why I kind of chuckle with Manh Choh, because when we use $1,000 higher gold price to estimate reserves, we lost a gram of gold. We didn't lose a gram of gold. It's just it results in a 7 gram average grade rather than an 8 gram average grade. Well, 1 gram is the average grade of most open pit gold mines today.
Sure.
So that's our margin, just between using a feasibility $1,400 gold price and a today's long-term gold price that people are comfortable using in a mine plan of $2,500. So that's a robust project. I mean, and because of that, we added a year of mine life.
Sure. That makes sense. T from the chat asks, any thoughts on repricing the warrants that are currently at $20?
I'd say no. Mike, welcome to chime in.
I haven't really talked to you about it. I guess it's an alternative for us, and we could do it. It would just take a little more thought and figuring out if it's worth the effort. But it's definitely an option if we wanted to go that route.
Great. This is the most esoteric question so far. So Rick, I'll throw it to you. Feel free, Mike, jump in if you'd like. I want to know what you think this is Patrick from the chat, wants to know what you think is driving global gold demand today, and what are the most likely drivers during the next 2 to 5 years?
Oh, okay. Clearly central banks, not our central bank, but other central banks, mainly China, Iran, Turkey, Russia, they're buying gold. Those central banks are buying gold fundamentally because they think that the U.S. dollar is overvalued, and those same countries are proactively looking at creating an alternative to the U.S. dollar. I don't know whether it'll be successful and how long that's going to take, but it clearly is a plan that those countries' central banks have, and they have that in common. So it's not like it's just one of them. It's not just China. It's not just Russia. It's not just Iran. It's all of them. And they have some other interesting folks that are playing along, like the Saudis. So yeah, it's an interesting dynamic. U.S. dollar is a reserve currency. It has been since World War, effectively since World War I, but more formally since World War II. But reserve currencies come and go. It used to be the Dutch guilder, and then it was the British pound, and they came and went, and at some point maybe the dollar comes and goes. I don't know. Obviously for me personally, as living in Alaska, some of that's a good thing, and some of it's not a good thing. So yeah, but that is the principal driver. Is central bank buying, and I don't see that going away.
Great.
If anything, I think it's going to accelerate because President Trump is not afraid of debt. He's built his empire on debt. So I don't see that going away.
No, fair enough. 2 more questions from the chat, and then I'll throw it to you guys for a last word each. Jay from the chat asks, with the DSO method for Johnson Tract, will there be any processing on site, breaking down some of the ore because some pieces are too large, or the two examples that he gives?
The only thing I think we will take a look at is ore sorting, and that may require crushing, because you have to have sort of a uniform, more uniform size. You don't want to have basketballs and pebbles; they don't sort well. But that would probably be the only thing. But nothing. I'd say nothing from a strictly processing, crush grinding standpoint. It would be only ore sorting is probably the only thing we look at.
Great.
We want to keep it simple and keep it very small footprint.
That makes sense. Last question from the audience. Mike asks in the chat, any updates on the trucking lawsuit?
Short answer is no. It's scheduled for the lawsuit from Citizens for Safe Communities is scheduled for hearing in August.
Great. Appreciate that update. So as that is, I think I got to all the questions in the chat, but while I'm giving Rick and Mike the last chance to sum up today, please do shoot any last questions you got. But Mike, I'll throw it to you for last words before tossing it to Rick.
I think we're in a good position going into this year with our cash and working with our lenders. I as production starts, we're confident that we will deliver on the schedule that Kinross has given us, and we hope to do better. And I think we should be able to deliver on the guidance, and if not, beat the guidance on costs and production for the year.
Great. And Rick, I'll throw it to you to wrap us up today.
Yeah, look, last November and the reduced production profile and higher costs, obviously that wasn't good news, but I think it's been an overreaction by the market. I think once we start production back up and we're hitting our targets and maybe beating our targets over the course of the year, my hope is that we'll get back to where we were, and as we continue to demonstrate the value that we have at Johnson Tract and Lucky Shot at advancing those projects. I think the PEA will be a good marker for the potential that is inherent in Johnson Tract and why we acquired it from HighGold. And it's a spectacularly high quality project, and I think our plan is the right plan for that project, for developing that project.
Awesome. Rick, Mike, thanks so much. I know we went a little over time, but as always, appreciate it very much. And everybody in the chat, thanks for joining. And for those watching the replay later, also thanks for watching.